It's also important to keep in mind that this budget is coming out after Australia has seen some setbacks in its vaccine rollout and ahead of the next federal election. So investors will have both of those issues on their minds as they comb through this budget.
Jackie, now based on what we know about this budget so far, tell us about some of the key stocks and industry groups that are likely to be impacted by the proposals, or have they already been impacted?
So we do know quite a bit about what's coming in this budget tonight. Some of these proposals have been pre-announced over the last few days. As I mentioned earlier, infrastructure spending is going to be a big part of this budget. That could affect stocks like steel producer BlueScope and cement company Adbri. Child care providers like G8 Education might also benefit from proposals to overhaul child care subsidies. That was announced last week, I believe, and that stock got a bit of a boost after that announcement was made. And analysts have said in the following days after that announcement that some of these measures related to child care could have the potential to increase occupancies for businesses across the sector. But some other sectors that will be highlighted in this budget that we know of include aged care providers, health insurers, and retailers.
Thanks, Jackie. Equity Markets Asia reporter Jackie Edwards. Just to tell you about how we'll be delving deeper into the Australian budget Wednesday. Joining us to break down those numbers will be the Australian Shadow Treasurer Jim Chalmers and ANU School of Politics and International Relations Professor Jill Shepherd.
For now, we'll do a quick check of the latest business flash headlines. Amazon is said to have sold $18.5 billion in bonds to refinance debt and buy back stock in its biggest ever debt sale. Sources say the bonds were issued in 8 parts, with the longest portion taking 40 years to reach maturity and yielding 95 basis points over treasuries. Amazon has tens of billions of dollars in cash after a record quarter, but it's taking advantage of spreads at 3-year lows. Startup mortgage lender Better is said to be planning to go public through a SPAC deal backed by Novata Capital. Dow Jones reports the transaction could lead to a valuation of around $7 billion pre-money and be completed this week. SoftBank Group may also put up $1.3 billion after recently investing $500 million in the startup, according to the report.
All right, let's have a look at what's going on market-wise. And certainly it's a day not to be a bull at the moment. And we've got stocks and futures contracts all pointing in the wrong direction for those people who want to see the opposite. Hang Seng, 2.1% down. Nikkei, at one stage, down about 3%. Just checking in there with the Korean market. It's not as though as anybody immune. Not so badly off for the Bursa Malaysia. We've got GDP numbers coming out of Malaysia in just a short while. In fact, about 4.5 minutes away. Looking, according to the economists, at 0.9% fallback as far as growth goes. Singapore Straits Times Index, there we go. TWSC getting a hit here as well. Taiwan may indeed be tightening COVID rules, and this is down to this growing outbreak. All of this coming from the Apple Daily, and the Premier may announce that a tightening of the COVID prevention rules will be announced when he visits the Central Epidemic Command Center. Looking also at what's happening here in Hong Kong as the Hang Seng lunch break too. We're looking at in a second. European futures are down. Nasdaq futures certainly coming through as well. We're looking at short interest in the Nasdaq 100 ETF in free fall as recently in March, was surging before the index had its biggest plunge since March. And looking at these energy stocks still, as we do of course have that outage of that pipeline in the US. Meanwhile, as we're head for the lunch break in Hong Kong, it's not looking good for Chinese stocks. 8 shares having a bad time of it. It's so bad that in fact the benchmark is getting closer to entering a bear market. We've got the overall Hang Seng at the levels not seen for about 6 months earlier today. This is Bloomberg.
Oh, yeah.
This is Bloomberg Daybreak, but at least our top stories this morning. Inflation angst hit stocks as commodity costs soar. China's factory gate prices surged more than expected in April. We get US CPI data tomorrow. China's once-in-a-decade census shows that the population is growing at a slower rate. The nation gets older and more urbanized. Tensions escalate further as Israel launches airstrikes on the Gaza Strip after Palestinian militants fired dozens of rockets towards Jerusalem. Officials say 20 Palestinians were killed, including 9 children. And the Emir of Qatar meets with Saudi Arabia's crown prince in Jeddah, the latest sign of cooperation between the two nations. Just got 8 a.m. across the Emirates. I'm Yusuf Gameddine in Dubai. Eid Mubarak if you're celebrating. Meantime, investors are taking quite a bit of cash off the table ahead of the critical US CPI data. It's led to a tech scare, and some of the big names got hit. Alphabet, Amazon, Netflix, and Apple. Although tech analysts see a buying opportunity at Goldman Sachs underscores that the low interest rates and the growth prospects are going to support the lofty multiples of mega caps. We're called still substantively lower on the Nasdaq futures, down by as much as 0.9%. The weakness in stocks boosted demand then for haven assets. You've got your US break-even inflation rates jumping and led by the 5 years, so currently with 159.14. I want to flip the board and show you some of the dislocations in some of the other asset classes, specifically around Brent crude and iron ore. We saw iron ore, that's a Chinese exchange, raised its trading limits and margin requirements for iron ore contracts, and the government basically stepped in to cool some of the price swings, and Brent crude declining substantively as well. Well, with that in mind, let's check in on how the markets are faring in Asia with Annabelle Drollers, who is in our Hong Kong studio. Annabelle.
Thanks, Yusuf. We've just got some headlines crossing the terminal now. This is GDP data that's dropping for Malaysia for the first quarter. Now, on the year, we have seen a contraction of 0.5%. That is a little better than what economists have been forecasting for a 0.9% decline. On the quarter, though, we saw expansion coming in at 2.6%. That was, or 2.7 rather, that was significantly better than the forecast for growth of 0.6%. Now, at the same time, we are hearing from the Malaysian Central Bank, the BNM, saying that Malaysia will meet its growth goal for this year of 6 to 7%.